Hey, good morning, good afternoon, good evening. It's morning here for me. Welcome back to the channel. Welcome back to another video. My name is Kevin, Kevin in all caps, youtube.com/@Kevin247. And before I get into it, I just want to show you guys our view from our stateroom balcony this morning. Pretty calming, pretty relaxing, especially in consideration and in comparison to how yesterday's video ended with mass chaos and panic as people were running after we were cruising through a storm, a thunderstorm here in the Gulf of Mexico as we were leaving Tampa, crossing, I believe what you guys said was the Skyway Bridge, I think Skyway, and heading into the Gulf of Mexico on our way to Cozumel, Mexico. So I just want you guys to see this view. Let me stand up so you guys can get a better look. Hopefully my mic doesn't blow away like it did last time. If it fell into the ocean, that would be terrible. But here we are. Here we are. And I don't know if you guys can see it, but that's our stateroom. And my kid, she's sitting up there. She's got a little bunk bed on top of our bed. It's a unique arrangement and situation. A situation that we are going to try to navigate. We're going to try to navigate for today because today is Monday. And if any of you guys follow my wife, Squirrel Tribe, on Squirrel Tribe 2.0, then you know that Monday is a special day, Mimosa Monday. And we do have pretty good internet access and connectivity here on the ship. We chose to go the route of the internet package for everyone so we can communicate, stay in communication while on the boat with each other and avoid expensive roaming charges and fees. And forego the drink package, which I think the drink package is actually, I mean, unless you're like a heavy beer drinker or something like that, I just don't see it being worth it based on how they've redesigned and restructured the drink package and everything that comes with it. So if we do indulge in a cocktail every now and then, we just pay for it. But for the price that they were charging, several $100s a day, it wasn't worth it. They didn't allow us to bring water. We had a case of water, and they said you cannot bring plastic bottles of water on the boat. That was kind of a letdown, but I will say that they aren't price gouging on the bottles of water on the boat, so that's a plus. But either way, more on that to come. Make sure you check out the other channels because we are posting more about the vacation and this traveling experience over there. As well as I just uploaded a video to Patreon this morning for all the members to see. Now, I do want to talk to you guys a little bit about what's been happening and this communication that I received from my bank. And normally, I have news updates for you about PNC Bank, Wells Fargo Bank, Signature Valley Bank, SVB, Silicon Valley Bank, Signature Bank, First Republic Bank, Chase, Goldman Sachs. But this time, and actually I had one from my credit union that I brought you guys a few weeks or a few months ago where they had a system outage, which was really concerning. But again, remember, diversity is key. Diversity, security, and cash flow. And I never want to rely on just one. Nor do I want to have too much in one because, again, from the video I uploaded yesterday, you guys know that putting money in the bank is not necessarily the safest or smartest thing to do, and it doesn't really allow you to grow your money, put your money to great use, allow your money to work for you and make more money and build wealth. Potentially wealth that could be used to go towards retirement and retirement income opposed to retirement savings, especially at a time like this where I actually came across somebody. Now, granted, I told you I want to get my mom and my mother-in-law, Michelle's mom, Squirrel Tribe, Mother Squirrel Tribe, I guess, on a video so that they can talk about their Social Security budget and cost of living adjustments and lifestyle, and their thoughts and opinions on Social Security, as well as should you claim Social Security as early as possible at age 62, depending on when you were born, especially taking into consideration your life expectancy possibility, as well as the potential shortfalls in Social Security. Having only worked all these years and contributed to the program and waited all that time to get your full retirement age FRA benefits, to then be told, sorry, there's none left. If you guys want to see that video, comment down below. If there's enough interest in that, then I'll be sure to get those. I'll get them on a video for you guys, and we can even do a live stream and do some Q&A. But this particular communication I received was from Bank of America, which is my primary bank. Not my only bank, but my primary bank. And the reason being is that I've had Bank of America since they were Nations Bank growing up as a kid. And their ATM network was really what drew my attention to them, because the network eliminated fees. The ability to deposit at ATMs was very convenient. And I just grew to know and learn their system, and I never had any issues with overdrafts or random charges or crazy changes or anything like that. So I was very comfortable with them. I had continued to grow a long-term history with them as an account holder for, probably over 2 decades. So it just worked out. I've got some business accounts with them, personal accounts, savings accounts, investment accounts, and they treat me pretty well. However, they are, not immune to the challenges that we are all facing in this economy, and they have since shared the announcement. I don't know if this is a warning more so than a alert, a scheduled outage, so to speak. Nothing to worry about or panic about, but it is important that we pay attention to what's happening and what we're being told, and that is that they too are closing branches. They're closing branches down. And reason being, they state that, the added competition of online banks that lack the physical brick and mortar location and reduced profitability is quite possibly the main contributing and driving factor behind these bank closures. I know that Bank of America in Atlanta, before we moved from Georgia to Florida, a lot of the locations started eliminating tellers, and they were going to this digital teller. And I even brought you guys a video from California last year. I believe it was California when we were doing our full-time van life road trip, and we spent 2.5 months in a Class B Mercedes Sprinter, American Coach Patriot MD2, and we ended up at a Bank of America, and I was trying to get cash just to have it because I didn't want to travel without cash. And the bank was in a shopping center, it was in a strip mall, and you used your debit card to gain access into the storefront. And there were no physical employees there. It was all virtual, web chat, interactive live chat, kind of like how we do an interactive live chat, live stream live chat on Patreon. And you guys can join us from anywhere, and you can choose to show your face or not, but we get to have conversations and communicate and talk in real time, back and forth about real topics, real people. No, open book, full transparency. And so I noticed that Bank of America was doing that more. And it was kind of annoying at times because, if I walked into a bank, it was because I wanted to engage with a person for that particular transaction. But it's just something that we are going to have to, at least I'm going to have to learn to get used to, because this is the way of the future. This is how business is changing and evolving. And Bank of America won't be the only one closing branches, and they won't be the only ones trying to adjust and modify their business strategy and business structure and business plan to reduce costs and try to increase their profits. And I'll tell you guys right now that if your bank isn't profitable, then your bank will cease to exist. So we kind of want to make sure that that happens, okay? A full and total banking collapse and banking failure would be devastating and detrimental to our economy and our society and our country at a time where we are likely going to see some increased challenges as a result of the commercial and corporate mortgage real estate lending loan default, which is going to be upwards of multiple hundreds of trillions of dollars that could potentially, much like the banks moving to a virtual platform, businesses are too. And part of this post-pandemic Build America Back Better recovery, a lot of physical office space, these buildings, these lease spaces, mortgages that have to be paid on these multi-million-dollar properties they're going unpaid. They're defaulting on these debts and these loans because people are not in the office like they used to. They're working at home. They're working remote. They're working online. And so these locations aren't needed anymore. And, Bank of America could potentially fall into a similar category where they don't need the physical locations anymore. Would Bank of America stop paying their mortgage? I don't know. I don't think so. But at the end of the day, these locations, these facilities, these buildings, these brick and mortar locations, they're just not in quite the same demand and are slowly becoming more vacant and potentially extinct. Possibly sold for, a huge discount, pennies on the dollar, liquidation, fire sale, in this liquidity and insolvency crisis nightmare situation, and then repurposed for, I'm not quite sure what yet. Maybe they'll become data centers. I don't know. Everything's going virtual. Everything's going online. Everything's becoming AI-based, artificial intelligence, augmented reality. But I hope that I don't see my local Bank of America branch on the list of branch closures. Odds are I probably won't, because it's the only one within any reasonable distance in relation to where we live now that we have moved to Florida. But I would likely expect to see that in certain major cities where there have been maybe an overabundance and oversaturation of branch locations, that they would probably see some of theirs closing, just because there would still be a viable option probably just a few miles down the road. I will let you guys know what I find out, or maybe if you guys find out before me, feel free to drop a comment down below, shoot me an email, hit me up on Instagram, send me a DM, or even message me on Patreon. A lot of folks are sending in some really valuable information over on Patreon that we're talking about and discussing when it comes to money, income, savings, jobs, employment, investing, business, retirement, you name it, as well as content creation and building channels, building brands, and this, that, and the other. But, we got a lot ahead of us. We've got a Fed rate hike pause. I don't think that this is a pivot or a reversal or anything like that. It's just a pause. And odds are, much like I told you guys at the end of last year, this year would be more of the same. And we're on track for that. So I really, truly expect to see and believe that 2023 is going to continue on, much like this ship is continuing on its path to Cozumel, Mexico. And we are going to continue on our path for 2023. Maybe 2024 will bring change, quite possibly. Administrative change that could be a turning point for our economy, for our jobs, for our money, for our income, for our savings, for our debt, for our credit card balances, for our student loans, for our mortgages, our homes. I mean, you got to think. There are so many people out there today that are struggling to pay rent, struggling to pay their mortgage, struggling to pay their car notes, facing eviction, foreclosure, repossession, living paycheck to paycheck, barely just getting by and keeping their heads above water, no pun intended. And they would really, really look forward to and love to have the ability to restructure and refinance their debt, get lower interest rates, kind of get back on track. But I will tell you this, that in order for that to happen, you will have to stay current. You will have to pay your bills. As challenging as that may be for some, you will have to keep your credit in good standing. But maybe even the biggest challenge would be the potential change in the housing market that could see home values driving down, which, as you know, if your interest rate today on your mortgage is 6, 7, 8, 9, maybe even 10%, and you want to refinance to a much more affordable rate that would lower your monthly payment, not taking into consideration PMI, the additional PMI, the mortgage insurance, if you're financing more than 79 to 80% or 78 to 80% of the value of the home, then what will happen is when the rates come down, which eventually the rates will come down. When the rates come down, the biggest issue we may see is that, all right, you can refinance and save 2, 3, maybe 4 points on your mortgage, but the appraised value for your property is now 20 to 30% less than what you bought it for at the height of the market, the height of the housing market bubble, the height of the pandemic, or whenever you bought it, which could mean, if it's a $500,000 home and it's valued at 20% less, that means that you would have to come up with $100,000 to pay towards the principal balance in order to refinance at the lower interest rate. Now, granted, that would also lower your monthly mortgage payment considerably, drastically, but the real question being, how many folks out there have 20 to 30% of their home's value in liquid cash available to make that lump sum payment in order to capitalize on that lower interest rate? So these are things that I would be focused on and working towards today in anticipation for that change, that pivot that eventually will happen. It's just they're priming the pump now, and we will see. Ultimately, we will hear, and I will share with you guys what the Fed's plans are, so that you guys are ready and prepared for that. But most importantly, like I said, in this time, in this liquidity crisis, this insolvency nightmare that's hitting personal balance sheets, corporate business balance sheets, the bank's balance sheets, now is the time. Really do what's hard when it's easy. You gotta make hay. You gotta hit the ground running. You gotta be working hard every single day, because we're going to see opportunities present themselves. And these opportunities, I think, I'm going to let you guys go, because I think Michelle is out. I don't know if you guys can see. I think she's coming out of the bathroom now. She ordered coffee for room service. We got coffee. It was free. And then, we just tipped them for bringing it. So that was pretty cool. But here's my thoughts, folks. I'm going to let you guys go. But I honestly believe that we are going to see somewhat of a replay or a repeat of 2008. Okay, I got a friend of mine. We're calling him the Michael Burry of 2023, or maybe the Michael Burry of 2024. But ultimately, we're having talks and discussions about the real estate market, but more so importantly, the commercial real estate market and the corporate real estate market, because I believe that we may see an opportunity like we saw in 2008, but in commercial real estate, that would allow you to buy these assets at fractions of what they cost to be built, really, when you think about it, and then be able to turn around and flip that in a completely different market with business. Remember, I told you, business will support business in this market better than the consumer supporting the business. Not to mention other forms and methods of creative financing at a time where the liquidity crisis hits high income earners who have to dump very, very quickly because they can no longer afford their lifestyle, or this insolvency nightmare that forces folks into a position to become liquid as quickly as possible, which would allow for great opportunities in assuming some of these debts and loans at the old lower interest rates without having to put down large sums of cash, tie up your credit, or be subject to the higher interest rates. Like, for instance, I'm truly expecting to see a flood of high-end exotic luxury cars hitting the market from folks who were high-income earners who are feeling the squeeze, but being able to get these vehicles at a discounted rate will be negated if you have to pay the higher interest rates on the loans to borrow to capitalize on these investment opportunities. And that's where this creative financing comes in, and we're going to see it and across the board, in my opinion, from automotive, car industry, to real estate, consumer, personal real estate, single family home, condos, townhomes, mobile homes. Even though mobile homes are titled as vehicles, either way, commercial, corporate real estate, the list goes on and on. Businesses are going to be sold at huge reductions and discounts. The opportunities are going to be seemingly endless for those who are paying attention and who are prepared. So as these updates continue to come out, I will continue to share them with you, and I will continue to engage with the folks on Patreon who are interested in that and so much more, as well as sharing with you any of the correspondence and emails that I receive, the insider intel, the boots on the ground, and also what's happening on this cruise ship and the rest of this vacation. So I will bid you guys an adieu, and until next time, you all take care, be safe, be kind to one another, smash that like button, subscribe to the channel, make sure your alerts are still, your notifications are still set, because YouTube's been turning them off without people's consent. Make sure you check out the free links in the description down below, and I will see you guys real soon. Take care. Bye.